Yo, what's going on, everyone? In this video, we're going to be discussing my Solana price targets as we may be concluding a possible wave 4 of the intermediate degree in the orange as we have here on the macro. Similarly, we are seeing almost the same exact price action for Bitcoin, and as explained in my previous Bitcoin videos, we have a pretty good contender for a bottom on Bitcoin that is also showing a possible wave 4 that may be foreshadowing the same type of price action for Solana going forward. Now, trading a wave 4 can be challenging due to the nature of how wave 4s operate in general. They can be constructed as pretty much any corrective pattern, which ultimately creates more subjectivity and scenarios, but more importantly can be even more confusing due to them being valid all the way down before breaching into the price territory of wave 1. However, if we are versed with the Elliott Wave Theory, we can reduce some of the confusion with Fibonacci support levels in mind, and that is the best tool to use to create more articulate and narrow down scenarios for wave 4s. We do have some interesting confluence being built up here. With that being said, since we have tapped into the 23.6 level on the logarithmic chart as we have here, which really isn't a common price target for a wave 4, and I'll explain that in a bit, but due to a 50% bounce on that level alone, this may be the possible bottom at the 23.6% level. More interestingly, we have not only hit the 38.2% level on linear, but we've also hit the 50% level on that linear scale as well. So we do have a lot of confluence being met at that 23.6% between the logarithmic and on the linear function as well. Ultimately, when on the log scale like we have here, you would ideally want to see a wave 4 retrace into that 38.2%, but we did not get that. So that does raise some eyebrows and the possibility that we may be going for one more corrective move to the downside. Now that is to be seen. We don't know yet. However, if a reversal does happen earlier, again, most notably at the 23.6% level like we have here, you need strength, and right now with that 50% bounce that we had, it does indicate possible strength within the markets right now. Now, with the 50% bounce on that 23.6% level, whether it is deemed strong or not to you as an investor is something that you have to decide on your own. To me personally, having that 50% bounce does indicate strength, but again, I would be happy with even one more low to the downside if it were to come down and retest at 38.2% on the log chart as we have here. Another additional note of importance is that Solana's wave 4 has created an almost near perfect range of equilibrium for this corrective structure, either as an A, B, C, or WXY. Really doesn't matter. Personally, I am seeing this as a completed WXY because that does leave the possible option that we may be working in that wave Y still to the downside if we were going to be going back into that 38.2% level. Another added piece of evidence to help support why the more uncommon reversal of that 23.6% level, again, it's that 50% bounce that we had, but it's also due to the fact that our waves A and waves Y is equal in length. That is what you ideally want to be seeing as the first step to building a thesis when a correction is complete. That is ultimately the first level of support you will be seeing in a wave 4 corrective move, or of a simple zigzag or a multiple zigzag. So we did hit that level. Very, very interestingly is that this 100% level, when you're taking the partner leg of wave A and the partner leg of wave C or wave WNY, is that hit exactly, and that lines up exactly at the 23.6% level. That is why I think that there is a possibility that we have bottomed out here as well. Now, what if it doesn't? I do believe it is possible that the 1.618, with this current measurement in mind, that it does also line pretty much nearly identical with the 38.2% level as well. So yeah, we do have this level of confluence as well with that 161.8% if that A to the C were to retrace a little bit deeper. Now, again, we want to be saying that this is going to be a wave Y if it does retrace into this level, because this does look like a 3-wave move more than an impulse move in itself. So I would say to remove this ABC idea entirely and just say that we may be working in a WXY, as we do have that option for that possible A, B, C to the downside. That would still give us a pretty good level of support in these levels over here before we go to the upside. Now, another additional evidence to this is that we do have a pretty good Elliott channel being built here. If we take the pivots of wave 1, 2, and 3, our assumed wave 4 support is also at this level as well. So that does give us some good confluence again, based on not just the Fibonacci, but also on the parallel channel technique as well. So we got a lot of confluence being built up here for a possible move to the upside. Now remember, conviction is something that I do mention, and having conviction and sticking to a strict plan is really the only way to neutralize this tilting emotion that we may be running the risk of entering into a deeper correction. But for now, I don't see any worrisome price action for the time being, so this overall idea of a 1, 2, 3, 4, 5 ceases to be the higher probability at this current time of recording. Now there is a possible bearish scenario where we do have a deep wave B, either as a flat idea or a deep B wave as a normal zigzag. I have it as a normal zigzag because it does still not reach the 100% level. Again, I mentioned this in my previous video. I like to see flats reaching at least 95 to 100% of their previous territory. I think it actually hit the 90% or the 95%, so it may be still considered a flat, but I am seeing this as a normal zigzag with just a deeper B wave. It does create some subjectivity in that as well, because this move here does look like a 5-wave move. So it would be better fitted as a 5-3-5 structure, where this beginning structure is an impulse actionary wave going into wave A. This would be the B wave as an ABC instead of that 1, 2, 3, 4, 5 that we were looking for. We are working in that hybrid 5-3-5 structure, just like that 5-3-5 for a 1, 2, 3 wave as well. So the next thing we're going to be looking for is that instead of seeing this as an ABC to the downside, this may be the beginning of an impulse structure where this is the completed 1, 2, and ideally the next move for wave 3 to happen to the downside is breaking this level of liquidity. Now that hasn't even happened yet. We've just bounced out of these levels for the time being. I think that we may be seeing that one more move to the upside, but if you're a bear, you may be seeing this level breach even, and then we'll have that primary 1, 2 being created of a higher degree going into that wave C of a larger ABC to the downside for a wave 2. So hopefully that was helpful, ladies and gentlemen. I think for the time being, I'm still sticking with the conviction that we may be working for one more move to the upside. Again, I'm going to start shifting bearish once we get into these levels over here, because I would expect at least a pretty significant correction to happen at higher levels. And I think no matter what, if you're a bull or bear, these levels of a reversal are going to be expected. So hopefully that was helpful, ladies and gentlemen. I'll see you guys in the next video. Remember, if you're interested in joining the X-Force Global Discord membership group, the link is in the description below. Also, if you're not following me on social media, please do give me a follow there as well on X at X-Force Global. We also have a Patreon page that has just opened last week, where I do share more video content on there as well. So I am working around the clock. Thank you very much. I'll see you guys in the next video. Bye-bye.